Now, crypto is trying out traditional finance's failures in hyperspeed, but it's going to be fine. This is an opinion piece from CoinDesk. I find this one extremely interesting because we talk about the book, The Sovereign Individual. We talk about the digital transformation. And one of the key points to that I always found interesting was that the digital transformation, especially as it pertains to finance, will be highly accelerated compared to previous transformations like your industrial ages and your agricultural ages. And that's because we have basically this entire new digital world that accelerates the response of markets and everything tenfold. Like, it just makes it go extremely fast. It's hyperspeed, right? Because we have all of these computers connected to each other and we're able to communicate much more effectively. It means that when we go through these processes, it just is accelerated. So I wanted to read this opinion piece and see what's going on. It says, what is going on? What is going to be the most interesting here is seeing what happens to Bitcoin and other cryptos during these hard times. The last time I wrote about a stable coin, it failed spectacularly. So when a colleague of mine suggested I write about MakerDAO's proposal to invest in US treasuries to back its collateralized stablecoin DAI, I was reminded of the power I wield. I'm completely joking, by the way. I don't take myself that seriously, but while we are on the topic of spectacular failure, we should talk about spectacular failure. Just 2 weeks ago, this newsletter suggested that opaque intertwined platforms with excessive leverage were a danger to crypto investors. That was in the shadows of the hedge fund Three Arrows Capital's insolvency, but now Celsius and Voyager, two retail-focused yield-generating platforms, have put together restructuring plans. Which is, what do you do when you're screwed? Voyager even declared Chapter 11 bankruptcy, the good kind of bankruptcy for the record, if there's such a thing, proving that crypto is hell-bent on playing out the mistakes of traditional finance at hyperspeed. What's more, blockchain.com also stands to lose $270 million from lending to Three Arrows. Oh, and there's a handful of not so great crypto things happening right now, which we'll get into, but it's all going to somehow be fine. That and maybe more below. The economy is not looking good. The yield curve inverted this week. See the chart below. The yield curve inverting is often treated as a warning indicator for a recession. So that isn't great on the surface. And, you know, we've been yelling, hey, recession coming, inflation coming, and everybody's been telling us, gaslighting us, telling us no, it's not. And clearly it is. It's basically here at this point. Okay, but what does that mean? In plain English, the US federal government sells bonds or treasuries to investors like you to fund all the stuff they do. Those treasuries in turn pay you an interest rate or yield over a period of time. At the end of the period of time, the original amount is returned to the investor. If treasuries sound like loans, that's because they are. The amount of investors would expect to make on these treasuries is higher the longer the loan is. That makes sense. Your money is locked up longer, so in exchange for that risk, you get more yield. So then if you plotted the length of the loan on the x-axis against yield, you'd get a logarithmic looking growth curve. And there you go. Except when the yield curve inverts, which is what happened. Now 10-year treasury yields are lower than 2-year treasury yields. Theoretically, this means investors expect longer term rates to decline. Practically, this means banks, which depend on lending at rates in excess of risk-free rate, typically in the 10-year treasury yield, to make money, will lend less. And this will lead to a slowdown in the economic activity. Such is life in a debt-based monetary system. Also, a 75 basis point increase to the interest rates in July is basically a foregone conclusion at this point. According to the Federal Open Market Committee, almost all FOMC members were in favor of a 75 BPS hike. Federal Reserve Chair Jerome Powell told us that a 75 BPS hike was an unusually large one. No, really? 2 months in a row would seem quite unusual, but that's just me. All eyes on July 27th. The miners are struggling, and we're going to talk more about miners struggling here in just a second. We touched on how mining companies might soon capitulate by selling some of their balance sheet Bitcoins to fund operations as they struggle. given 2022 price performance mentioned in last week's newsletter. And just like that, one of the largest miners, Core Scientific, announced that it sold over 7,000 Bitcoin in June. Core's hasn't performed well in 2022, so it's unsurprising that they had to dip into their treasury a bit. All said, while miner capitulation is viewed as the beginning of a death spiral to zero, since miners are supposed to be the last line of defense, that isn't happening in reality. Core Scientific CEO Mike Levitt assured investors the company is focused on executing its plans, and the sale was just an exercise in maintaining a healthy balance sheet. To its credit, Core's didn't have to disclose that it sold anything given its earnings call isn't until August. If anything, we should applaud the transparency. Lastly, leverage continues to hurt everyone. The Luna collapse led to Three Arrows Capital insolvency, and now we are facing a crypto lender crisis. BlockFi received a structured bailout from FTX with what seems to be $250 million in earnout. Celsius halted operations and then announced some restructuring plans. And Voyager did the same but different by declaring bankruptcy. On top of that, it came out on Friday that blockchain.com might lose $270 million from lending to Three Arrows Capital. It's tough sledding out there. The news is still unfolding that all these lenders. In general, that this is all not good, but it does feel like the worst is behind us. FTX and its ever altruistic CEO Sam Fried is emerging as crypto's savior, as his or his firm's name has popped up in all discussions around companies who are failing in the embers of the Three Arrows insolvency. But it is a huge consolidation, right, of basically cryptocurrency assets, including mining. And that can be a concern here, at least in my humble opinion. So in general, these things, an inverted yield curve, higher interest rates, minor capitulation, and multiple crypto lender bankruptcies are not good. What is going to be most interesting here is seeing what happens to Bitcoin and crypto during these hard times. Not only is life tough in the crypto world, but macro makers or markers are signaling a recession. And although it was birthed out of a recession, Bitcoin has never lived through one. It will at the very least get interesting. And really, like, at the end of the day, this is the most exciting time to see how Bitcoin responds, because it was born out of the recession. It was born to basically protect the everyday man from recession to a certain extent. And I'm kind of curious how it's responding. What's interesting that I would like to still point out is a lot of people say it's following traditional markets, okay? But I would like to point out that I'm not necessarily sure that that is true. Once again, not financial advice, but if we look at that just from a zoomed out perspective, right? I expected Bitcoin to hit around 60K. I expected it to come back down to about 21K around this time. Its timing to be lined up with the recession could be complete coincidence. And if it maintains here through the recession, then it may be a pointer to it actually functioning as designed. And I think you have to get rid of the traditional finance mindset that we're talking about here. And we have to get rid of course, centralization. And this just, serves as a way to do that. Thankfully, things are happening quicker than I'm used to. I used to work in finance and traditional finance. The interesting thing is seeing what Bitcoin will do in the times of hard macro times, which is the root of all of this. Amid all of this, here's Bitcoin last week. And so he just shows basically the 21,232. So I guess it's going to be fine. Question mark, I don't know. Really, what I was hoping that they would get into with this article more is the relationship between traditional finance failures and the Bitcoin failures. Those failures, though, that just to be clear on what they're paying attention to, are all driven by centralized entities, right? And those centralized entities are making these failures that traditional finance did, and they're getting weeded out quite a bit more quickly. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.